Hello, everyone. Today, we got an early start of the stream. So the reason is actually I wanted to do the weekend routine right now, like pre-market, because I got a lot of questions asking me how do I find the stocks, like why adding these stocks into the main watch list, and also like the details of doing the weekend scans. And yeah, you can see I haven't done anything yet, like after Friday. So generally I will start from managing the watch list first. So like to take a look at the existing stocks rather than like doing the screeners and adding the new stocks. AEXR is looking really good, and on the daily, so on the weekly, I would prefer hopefully that like 1 or 2 more weeks sideways will be better. But on the daily, I think this is looking very decent. And but this but AEHL, I like it. It is a stock that loves pulling back. Probably like I'm not going to buy the breakout on this inside day breakout unless I don't know. Like I think 90% of the time I won't buy this inside day breakout. Probably gonna wait, maybe trying it at the 9 EMA, around the 9 EMA on the daily chart, or the 50 EMA on the 60 minute chart. this Redwire is doing pretty good. After earnings is getting followed through, and now it's back above all the EMAs, both on the daily and the weekly. So it's a aerospace stocks. So it's a space theme. Could you explain what each of the watch lists means and what the sections means? I think they're quite straightforward. The tier 2 watch lists are the smaller caps watch list, mostly under 5 billion market cap. Like this is my my rule for now. Maybe it is subject to change. And I just dividing them by the dollar volume, like larger than 200 million and less than 200 million. But I mean, I rarely trade the smaller cap stocks now. So yeah, the first thing is the liquidity. The second thing is the smaller caps are harder to trade, in my opinion. Like they're getting more shakeouts. That because probably because of the liquidity and and they generally like cannot make multi-week or multi-month moves. Like they're very rarely. Most of them are just maybe a really quick but explosive runs in a short period of time, and you have to really time it very well. And you also got stopped out quite often in the small caps from my experience. So I'm trading less the small caps now, and I think right now the larger names also have like there some of them are really fast movers. They're also the fast movers. So I prefer trading those like the larger names because I had a choice now. And this pillar watch list are the the slower moving names and the mega cap names. Most of them are above $100 billion market cap. So SpaceX is getting like I would say like the step one of a character change or a trend change, that it closed above the 9 EMA and as well as the 21. Like it generally I'm using only the 9 because it's faster, and most of the time the stock is only like gonna recover from one of the EMAs. Like, but SpaceX is getting above both the 9 and 21 on Friday, like after Friday. So weekly as well. I really like this type of candles. Opens lower, trying to push lower, but failed, and then rallies into the highs and close very near the highs. Like I would say, close at the highs. This is a really strong signal to me, and yeah, I will keep an eye on SpaceX probably, and also because of them the red wire strength as well. So you can see space theme is getting some steam. I kind of like this TSEM, especially after earnings. It's now breaking out from the earnings candle high, and all the EMAs are converging. It's just a little bit illiquid intraday. I'm not sure. I think the quantum names are in a pretty key level right now, both the daily and the weekly. I would say they're right at the resistance level, with a strong short-term momentum. So the 9 and 21 are turning up, and like RGTI is like 9 is already crossing above the 21. but still, it's still under the 150 EMA, and it's only the first day of breaking out from the 50 EMA. I think I think they can go both way, both the upside and the short side is still yeah, I think they're in a pretty crucial level right now. Probably I'm not going to take the short because I'm heavily long, and I right now I'm not sure about shorting. And for longs, I'm definitely waiting for the pullbacks instead of buying right here on the strength and being extended. I think this gap down on IoT is could be a pullback by entry on the previous highs and this gap level, as well as the rising 9 EMA. But it is a little bit too illiquid, so probably I'm gonna skip this one. But I do think that technically it looks pretty decent. On the theme is also on it's probably I don't know, maybe probably a software stock. So on the right theme as well. So yeah, I kind of like this this gap down. So far I don't see much interesting on the long side. So I think I got a few. Yeah, I noticed a few things. The first one is I got many stocks that are beating down are right now at the like the weekly 21 or the weekly 50, like MPCCJ, Oklo, and as well as or all the quantum names, and some of the semi names that is getting beaten down, and now it's bouncing back into the declining weekly EMAs. And definitely some stocks are, the weaker names are continuing like breaking down on the daily. And at the same time, a lot of the names, I think more than half of the names are right now at the like between the 9 or and below the 50. Like I think a lot of the names are like is staying between all the EMAs. And as I'm focused on the long side, like to me, I don't think today is a very good opportunities on buying into the strength, because when the stock is going higher, when those stocks are going higher, like I don't know, like SIMO, when they rallying into the highs, they're gonna face resistance, and this MKSI as well, this GEV as well. And among the strongest names, the leaders, like many of them are a little bit extended from the 9. Which will have a like a higher chance of a potential like a mean reversion or pullback into the rising EMAs. So the weaker names getting the resistance above them, and also the mediocre name as well, and the stronger names are a little bit extended. So I don't consider right now will be favoring the breakouts. Like I mean today, I don't know. Like personally, I'm not. I don't. I probably gonna skip the breakouts quite a lot. Mostly today. I won't say 100%, but probably not gonna trade any breakouts. And I really like ARKK's last week's actions, like coming from down below and now getting above. Strong close. Yeah, really good. Yeah, and most sectors are doing quite well, like above the EMAs and building higher lows. So yeah, personally, I'm not super worried about the market. Like the breadth is doing good, and like there it is improving. Non-tech sectors are also doing fine. So I'm gonna keep an eye on especially the mediocre stocks, like how they react to the rising 9 or the rising 21, and versus the declining 50 or the declining weekly EMAs. This is a pretty strong EP on Airbnb. Um, yeah, always loves to see the strong actions, like a gap up and then close at the highs. This is the type of action that's showing you the strength and the healthiness of the market. So just finished the potent scans. Looks like we've run out of time, but one thing to say that is you can see like I run out. I mean I finished checking all the charts of the potent scans. I think probably there should be 100 of them. Yeah, and yeah, you can see like after 100 of them, like the bottom one is still up, like up more than 6%, and it generally means that the previous training day was super strong, and yeah, you can tell. You can easily tell from that, and probably not much gappers today. And yeah, we got a lot of copper names doing strong last Friday. So apart from the semis and the softwares, and also we got a lot of healthcare names also doing very strong. This socket looks like it's getting a breakout. Looks pretty solid too. But yeah, probably not gonna trade it. Mostly because the individual names, like the weaker names and the medium strength names, are rallying into the resistance level. So I don't like that. So probably gonna wait for the pullback. Hopefully a pullback into the at least the 60-minute 9 or the 60-minute 21 would be the best. Like if AEHR is gonna take off, like I can only watch. Yeah, and another factor that I don't like taking like AEHR breakouts today, that is like I got enough exposure, and I don't want I don't want to pile up the small losses because of taking the lower conviction trade or the lower probability trade. and to ruin my mental capital. But like right now I'm yeah, I think my mental capital equity curve is at the all-time high, and I don't want to have like I want to avoid the unnecessary pullbacks. So this is kind of like my approach or my style. Like I don't want to I don't want to like take the unnecessary risks or like the fair trade, like not a really good trade to me. Cryptos, I forget to look at it pre-market. I consider them as doing fine. Yeah, I'm gonna only like yeah, as long as Bitcoin and Ethereum is staying above the 9 EMA on the daily, or maybe the 21 as well. Yeah, Ethereum staying above the 9 EMA, I think it's still fine. Not going to like micromanaging it. Like it looks like, but definitely now it's showing some rejection of the 50 EMA on Bitcoin and also the weekly EMA as well. But I'm going to like, yeah, not going to panic sell them, given that the market has a higher chance of getting a pullback. So, but I do think it would be a healthy pullback because they're kind of extended right now. What do you think on net earnings jump, but it almost gave back most of the increase? Mm, it's still above the 9 EMA, well above my stop. Not gonna do anything with it in a short period of time. Just yeah, just let it go its own way. Just got start out on AOI, but I am looking for the re-entry. they say EHR thing is too illiquid. I don't think I can get a decent size on this one with a tight stop for both my entry and exits. Like AMD, MU, and STX, they're all under the EMAs. Now it's rallying into the declining EMAs. Uh, it looks like the market is getting pretty strong on this 16-minute pullback. Still too early to say. So probably gonna skip AEHR today. So it looks like we're getting some rejections. Or maybe not. Man, this AEHR is just... I mean, it has to shake the opening range highs peoples out. That's why, especially on the small caps, because lower liquidity, so there's always something like that, and like doing dirty stuffs. I don't know. I think that probably uh there's probably some hedge funds or like quant are doing this type of shakeouts. Really, like since 2024, like this type of shakeouts or the intraday fade after the open for it just happens so frequently compared to like prior 2024 is just abnormal. Like I truly believe there's some like bigger players doing that. But I don't know. And actually, that doesn't matter as well. Um, I only know like the market loves doing this type of shakeouts. I don't care who is doing that and what's the reason behind. Uh, who is responsible for that? Yeah, that doesn't matter. But yeah, I I just getting stopped out multiple times when I'm buying the opening range breakouts and then get stopped out on the shakeouts after 2024 uh, by a lot, like a lot. There are too many occasions that I got shaken out. So therefore, I gradually, I gradually, slowly noticing this pattern, and then trying to catch the flow with the market, and getting on the same page. Like if the market loves shaking outs, then I'm going to trade the shakeouts instead of buying the opening range highs. And I'm just trying to find the best lowest risk entry, and I think it definitely it's gonna change over time. So yeah, I think many of us are maybe a little bit afraid of changing, like not adapting to the market. But I mean, like the world is always changing, and yeah, probably like 10 years later, I'm not going to trade the same type of intraday entries. Probably there will be other types of entries uh, in the future, like to gives me the lowest risk entries. But yeah, but my job and my goal is just trying to align with the market and find them. It's like as long as the market is not uh it's not at the perfect market, like as long as they're imperfect, and I believe they'll yeah, I believe there'll be rooms for profits on for the traders. Would you say you are less willing to sell partials since this is the start of a bull trend? Mm, yes, yes, I think I agree with that. But definitely, I think I'm gonna trim some in the future because I'm taking too much exposure right now. I actually bought half size AEHR on the limit order. I think the stop is I think I'm gonna, yeah, half size. I'm gonna give it wider stop on this one. I'm a little bit not sure whether I should re-enter circle or not. I I think the biggest reason why is I'm taking too many positions right now. Just too many. I'm not sure whether I'm like over trading or not, but I don't know. I really like it. How do you deal with multiple ideas being at the entry spot at the same time, especially using the 1 minute or 2 minute chart? I find it hard to get a precise entry on multiple names. I also found it hard to. Sometimes I will also miss some of the opportunities when multiple of them are getting into me at the same time. So yeah, um, I think the first one is like defining your entries before it actually happens. Like defining, are you entering on this 15-minute breakout before the candle has formed and before the breakout is taking place? Yeah, just defined or made the decision beforehand in advance. So yeah, trying to shorten your decision making time or reaction time as much as possible. And the second one, maybe uh, just 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 accept it. Accept the fact that you're gonna miss lots of opportunities. OUST was a good setup today. The lightest AEVA and OUST. Wow, I think it's a really good shakeout. You can say it's a pullback buy, especially on the weekly chart. On the weekly 9 EMA, a really quick flush and then a recovery on the as well as the daily 50, 60-minute 150. Previous swing highs like this level as well. Like yeah, just all things lining up and showing some strength on the bounce. AEVA, this one will be like purely on the EP candle low. Maybe also this 30-minute EMA, but yeah, I would consider it's a fair one because it's still a little bit extended. Yeah, but yeah, you have to really do this type of trades in a really good market condition. If you're doing in the sideways actions market, like back in back in June, or like yeah, back in February, you're probably the win rate will be really low. So yeah, the fair ones, the fair entries, maybe they're like the B, the B or the C entries, it really needs the favorable market condition to make them work. You max shot is so good. Yeah, I'm so sad I missed. I mean, to me, it's it's fair. Like it's an okay type of entry. Definitely, I don't like the extension from the 9. Um, yeah, but I agree like this kind of names can like go can do some types of lockout rallies or like the explosive moves that yeah, some type something like that that never pulls back to the 9. But still, I really prefer pulling back, like buying into the weakness rather than chasing the strength on this type of names. To me, yeah, for me, I'm not a fan of buying the strength in this type of stocks and in this type of markets. SNDK right now is looking really weak. Um, I think most of the memory names are looking weak. But technically, they could be a short. Um, but the StockX is doing pretty well. I mean, holding up quite well for now. Yeah, although I will be leaning towards the long side as long as it holds above the rising 9. If yeah, if we are showing like if we are seeing more weakness from the semi sector, like more names are breaking down, losing the rising 9 or the rising 21, etc. That yeah, then I will be, but probably that will be too late. So yeah, probably that I most of my semi longs are gonna get stopped out. So I'm just gonna let the stop to decide. Yeah, what what can I say? I consider this as a pretty poor stop setting on AHR. So probably I'm gonna get stopped out, but it's actually pulling back into the rising 9 on the 15-minute chart. I think I can like tighten my stop actually. Like I think setting stops below the 8-hour VWAP will be better. So actually today I prepared something to share. And yeah, it's about the dot-com bubble. So really think right now we're probably getting another crazy bull market in the coming few months or the coming few years. I don't know. Looking at the past, the only similar situation that I can find is the dot-com bubble. And apart from QCOM, I think I need to get better prepared for the potential climax run, and to get this better understanding on what is actually going on back in the 1999 to the 2000s, or even before then, like 1998. Wait a second. So apart from QCOM, I just asked AI what are the other names that have made a big move during the dot-com bubble. And let's start with the ones that are still listing right now. Yeah. And so the first one is Amazon. And it's an interesting one. Like Amazon has its IPO in 1997. And yeah, after this IPO cup with handle base and then a clean breakout, and is serving the weekly 9 pretty well. Like that, it has closed below it once. Yeah, but it recovered the 9 EMA pretty quickly and then keeps building higher lows. And then right here forms a pretty decent inside week near the previous swing high and like a probably a VCP breakout. I would consider this one like a really clean on the weekly charts, you can tell, and continues higher. And we got the first acceleration on 98 and another weekly breakout right here in late 98. And gets the first parabolic top on in January 99. Yeah, and then it's just kind of goes sideways after early 1999. Is this just getting like getting choppy and not making any progress, trying to attempting to make another move, but yeah, this one failed, and then gradually setting up for another one, also failed near the previous swing high too. So it's actually topped in December 1999 when the Nasdaq is like on the halfway of this final climax run. So actually, it's breaking down from all of its weekly EMAs. Like before the Qs, the Nasdaq found its top. So if Amazon is like you can say the earlier leaders of the dot-com bubble run, then yeah, probably we need to pay attention when it starts like breaking down in the weekly time frame and starts making lower highs before they're getting weak before the index or the general market showing weakness. And actually, like this one, like this inside week breakouts looks pretty good on the weekly chart, like right here. And it did have some follow through, like 40% move, made a 40% move, and then starting to roll over. Yeah, I think when Amazon's starting to show weakness or even breaking down from this breakout candle low, and definitely like breaking down from both the 9 and 21, that would be I would consider this type of breakdowns will be a warning sign. And the more stocks showing weakness, especially the leaders doing this type of moves of actions, that will be pretty bad. Yeah, but I mean, Amazon making like a 7,000% move in a year and a half is like phenomenal. It's just too crazy. Yeah, so second one is the Cisco. Cisco actually, I think probably is one of the largest market cap stocks back then. Like its moves is was pretty similar to the Nasdaq's. So they topped at the same time and then pulls back to the 50 EMA on the weekly, going sideways, failed to break out, and then we got a breakdown below the 9 and 21, and then just following the 9 EMA all the way down. Yeah, so the next one is Microsoft, and yeah, I mean, even looking back, like this type of moves are like really, really gigantic. Yeah, so Microsoft is a pretty slower moving names back then, I think. Like after like 1996, compared to those like crazy movers. But it found the top in December 1999. So before the Nasdaq topped, Microsoft has found the top before the market and make the lower highs before following the weakness, the market weakness, and yeah, and it's showing relative weakness all the way down when the market is going sideways. Microsoft, after breaking down, after this gap down, is just it's just not getting back. Yeah, so the next one is Oracle. I think this is also, yeah, a pretty solid move in the last bit of the rally. It did show some type of weakness during this choppy period, but it found support on the weekly 50 and then gradually have getting a strong breakout and a really tight cup with handle pattern, and then we got a shakeout and a breakout. And Oracle did make a higher high in September 2000 when the Nasdaq trying to break out from this range, from this base, lower part of the base, but it failed. Like 2 weeks later is losing the 9 and the 21. And yeah, and I think for a breakout after such a powerful and like a parabolic move, I think it's better to be a little bit more careful. And I believe like back on like August 2000, I think the market sentiment should be pretty bullish. Like after like 4 months basing period, going sideways for 4 months, and then like setting up higher lows back above all the EMAs, like this type of weekly VCP, it looks pretty bullish. But yeah, but the context behind is we got a pretty extended move, or like a really prolonged uptrend with a general extensions across the market. So the pattern itself, like definitely you can still try it out, but you have to be really careful. Like you have to maybe not using a large size, setting a really tight stop and not allowing yourself to turn this one into a like large a large loser. Like you have to really follow your stops. Like don't get too greedy on this type of breakouts. I think like too many people are only focusing on the chart pattern itself, but not like the context behind, and it is very costly. So eBay has also made a huge move in late 1998 to early 99, and then during the choppy period, it's kind of is going sideways for almost half a year, and then gets a pretty decent weekly breakout for 3 months, and then a huge reversal candle. And yeah, this one aligns with the Nasdaq top. So that's why I'm really focusing on the huge reversals, like the failed breakouts near the previous highs, or yeah, probably like slightly below the previous highs, or like slightly above the previous highs. Like this type of failed breakouts are the most dangerous and are the most powerful, in my opinion. Like you can see a lot of the examples are showing this type of reversals, and yeah, I mean on the weekly it's looking decent, but at the same time the market you can see is very extended to the upside, and showing some volume expansion as well. So yeah, again really need to be careful on this type of breakouts in the very last part of the rally, when the market is getting very extended, and and at the same time there are like other names are doing the extended move as well. Like it's not only eBay is making such a move, like a lot of the names are making 1,000% moves, 5,000% moves, and they can't go up forever. So it looks like Nvidia is an exception on the dot-com bubble survivors. It's actually still making higher highs after the dot-com bubble burst, and it tops in December 2001. Yeah, but I would like to focus on the period before the dot-com bubble burst. Like you can see Nvidia after this parabolic move, it is going sideways near the highs, and like the weekly range is pretty wide. Lots of rejection near the highs, huge red candles together with the huge the huge green candles. Like it's very choppy and like not moving that orderly. So we also got MU as well, and MU has actually made his move it's a pretty early leader on the during the dot-com bubble. It makes a parabolic top back in 1995 and then goes sideways for 5 years, breaking out in the last parts of the rally, in the really the last few weeks of the Nasdaq uptrend, and is surviving the first pullback pretty well, and then gradually it makes the lower low, the first lower low, when the Nasdaq tries to make it higher low. Like it actually made a higher low, but it failed on a week later. And actually MU is showing the weakness a week before the Nasdaq has pulled back. And yeah, I don't know, could this be a sign? And yeah, surely we're also seeing this type of a failed breakout, like it's trying to climb higher and like trying to setting up for another base, but it fails. Like this red candle is just too ugly to exist. And we also see some volatility expansion right here. Yeah, still it has made a 50% move in this last bit of the bull runs. That is pretty tricky. I think it's very tricky. And probably that's why. I think probably that's why like so many people are getting trapped in the last parts of the .com bubble. Like there's still some stocks are showing strength and yeah, holding up the pullback pretty well. Yeah, again, I think AOI and AEHR trades. I think AOI, this one is no, I think the semi trades could be avoided today. So actually, apart from the stocks that are they're still listing today, there are a few stocks that there are many stocks that haven't survived the crash and have been delisted among the years, and I found several. I think it looks pretty interesting. So let's start with this one. This one is Yahoo, and Yahoo had his IPO in 1996, and it made like this one looks like getting pretty parabolic, but somehow it bounces back and make another parabolic move. Wow, yeah, and find the first like really a huge reversal candle in January 1999, and if you if you remember the charts on Nasdaq January 1999, would be the start of the choppy period, like after the lockout rally, and then we got a several months choppy period, and Yahoo find the first reversal candle right there and trying to set up, like trying to build a base like a bull flag and then trying to push higher. It kind of did, but is not getting followed through, and then gets a huge strong rejection, and then gradually losing the 9 EMA and then goes sideways for like 10 months. For like 10 months, and then setting up a beautiful weekly, like a VCP pattern, or yeah, whatever you call it, inside week, and then we got a breakout. And we got another extension again. And notice this candle is December 1999. This one December, and this one is January 2000. And this candle perfectly aligns with the exact top of the Nasdaq. And then it looks like it's pulling back orderly. We got a pullback, and then go sideways around the 9 EMA, gradually climb above the 9 EMA, and then we got a failed breakout. And this candle on the March of 2000, the March of 2000 is probably before the Nasdaq has before the Nasdaq's second leg down. The breakdown on the Nasdaq is probably at the August of 2000. So it's probably right here. And Yahoo has made a strong downtrend before the top in January. Yep, so this is Yahoo, and the next one. This one is called Modus Link. Probably it's called CMGI before, back in the 1999s, 2000. And this is like a really crazy move. It's going up from like $100 to 15,000 in 3 years. I mean 2.5 years. So this one also looks pretty similar to Yahoo. I think also find the top, the first parabolic top back in the early 1999s, and then go sideways and setting up a great weekly breakout. Like this is a really good looking weekly breakout, and made another like 300 200% move, and then topped where with the Nasdaq pulls back, trying to break out, made a but failed, and then gradually rolling over in March, and then it just keeps going down before the second leg down of the Nasdaq. I think I can imagine like many people are gonna like talk about the internet bubble, like back in during this period, like when the Nasdaq is getting extended and it's going like the Nasdaq is getting is going into the sideways the choppy period. Probably there are still some skepticisms during this period, and then the last rally probably will be the craziest, like the euphoric runs, like when the boost really starts taking over and like completely crowded the skepticisms, and that will be the final. I think that that's probably this how the sentiments is doing back then, and actually this is, you can consider this is also like a failed breakout in this like July 99. Like I think this is the trickiest, like this trickiest on this internet bubble. Like I think if you're shorting on this breakdown, you get several week follow through, and then the market found support again, and then setting up higher. And when it really came, like when the real top has really been found, like that will be, you will never know which one is gonna be the real top. But like even if you're doing shorts, you have to be really be careful when the market is getting very extended. But I believe like this one back in 1999, the Nasdaq is not that extended. Like it's going through the choppy weak uptrend period. This one definitely gets very extended in early 2000s. Yeah, hopefully that, I don't know, could this be, can I found any like potential like a sentiment, but there's no social media back then, so probably difficult to find the answer. But yeah, I would be very curious what's the sentiment between this chop period and the last bull run, and also like this the last base So in the last one, it will be this one, the Sun Microsystem. Uh, so this one is starts taking off in August 1998. This is the start of the Nasdaq lockout rally. Uh, maybe yeah, what one month before the Nasdaq lockout rally in the late 1998. I cannot find the candlestick chart, so this is only showing the monthly close. Kind of finding the first parabolic top in the February 2000, and then continues going higher, making a new high in August before this 90-degree crash. So the August will be the second will be the start of the second leg down on Nasdaq on the general market. And this Sun Microsystem is making another new high before the crash. I think, yeah. So I probably can kind of understand why the dot-com bubble gets get gets that many damage to the traders back then. I yapped too much today, so what? But I really think studying these past examples really helps to letting our brain to get a type of like a pattern recognition training, or um to understand, or to at least have some kind of alarms when we are really getting into a similar situation in the future. So yeah, just go and find. I think right now with the help of AI, then it will be much easier to do this type of deep dives or studies or research, anything you call it. And I think it helps a lot. Yeah, so trading, I really is most of the time are those like the boring stuffs. I don't know how many people uh loves doing that, or like at least willing to do that type of stuffs. But yeah, most people are only getting intrigued, getting interested in how you nail the entries, how you find the best opportunities, rather than going back and looking at the previous moves. Yeah. So I'm gonna end the stream here today, and thank you guys for coming, and see you in the next one.